Welcome back, students who are taking financial accounting, and in this series of videos we are working on the problems, the Group B problems for Chapter 7 that were assigned in the digital study guide. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing, and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Right, so in the last problem we stopped on 51, now we're working on 52, which is the aging of accounts receivable allowance method. It's a Simpson Supply completed the following selected transactions during 2014. Number one, open T accounts for allowance for uncollectible account and bad debt. These accounts have beginning balances of $1,400 credit and 0 respectively. All right, so I'll do that up here. This is the allowance and has a credit of $1,400, and this is bad debt, and it has a balance of 0. 2. Record the transactions in the journal and post to the two T accounts. Remember to update account balances, but ignore posting references. I'm not going to update the balances. I'm just going to post, since we're only going to need a final balance. All right, and then it says here, December 31st balance of accounts receivable is $87,550. Show how accounts receivable would be reported on the balance sheet at that date. All right, so let's back up here. All right, so we took care of number one. We opened up T accounts. Number two, record the transactions in the journal and post to the two T accounts. All right, so 117, sold inventory to John Nelson, 800 on account. Right, well, you should know how to do that by now. So we're debiting accounts receivable, crediting revenue for $800. Right. June 29th, wrote off John's account as uncollectible and after repeated efforts to collect from him. Right. Well, remember, in the process, since we're using the allowance method, all right, at the end of the accounting period, we make an adjustment. We calculate our bad debt, we estimate our bad debt, and we make the journal entry to debit bad debt expense and credit the allowance account. Right. So now when we actually, because remember, he actually has an accounts receivable, but now we're saying, okay, this accounts receivable of $800 is no good. Okay. So when we take it off the accounts receivable, we have to reduce our receivable, right? So it's no longer on the books, but we have to debit something else. Well, what are we debiting? Well, we had already written off the bad debt, so we have to use the allowance account for 800. Okay. And remember, in making that adjusting entry during that period, which happened in January, okay, that kept our we matched up our revenues with our expenses, and it made our accounts receivable more realistic. And the reason why I mentioned that is because problem 7-51 was about, the bad debt and the accounts receivable being more realistic using an allowance method versus the direct write-off method. And so that was 29. Right. August 6th. Received $650 from John Nelson, along with a letter stating his intention to pay within 30 days. Reinstated Nelson's account in full. Okay, so what we're doing is since this was our where we wrote off the accounts receivable, and now we're going to reinstate it. Basically, it's just a reversing of the entry. which puts it back on our books the way it was. All right. Now, on September 4th, received the balance due from John Nelson. Okay, so we're receiving cash, so we're debiting cash for $800, and it goes against the accounts receivable for $800 because he's paying off his accounts receivable. Okay. December 31st, made a compound entry to write off the following accounts as uncollectible. Oh, wait a minute. No, I'm sorry. We received $650. No. Jeez, Jim's easy. 800, 800. Now we're only receiving 650. Sorry about that. All right, I make mistakes too. All right, 650. Okay. Back up. I'm really getting myself messed up here. All right, back up. On August 6th, received that's what it is. Okay, I got it here. So on August 6th, we're reinstating the account, and then we're receiving the $650 in cash. Okay, so now on 9/4, we'll receive the balance due. So again, we're debiting our cash for $150, and we're crediting our accounts receivable for $150. All right, there we go. Okay, so just to clarify, on June 29th, we wrote it off, but on August 6th, he says he's going to promise to pay it back. So we reversed the entry, and in good faith, he sent us $650. So we show the $650, and then on 9/4, he pays off the remaining balance of his account. Okay, so that's the entry. All right, on December 31st, made a compound entry to write off the following uncollectible. So it's $175 for Bill, $240 for Nancy, and $137 for Daria. So that's 12, 10, 15, $552. Okay, so that's $552, and on 12/31 we would debit our allowance account for the $552. Remember, we already, in the previous accounting periods, we already wrote off to bad debt. So when we're actually writing off the accounts receivable, we don't write off the bad debt. We write it off to the allowance account. And then we would credit the accounts receivable for each one of those. In the amounts of, the 175, 240, and 137. Okay, now that's the way it's shown in the solution. Okay, in the solution manual. So this would be the Bill Rentz, this would be Nancy Carlson, and this would be Daria Putin. Okay, but the reality is you're not going to create an accounts receivable for each and every customer, because then you'd have 50 accounts receivable accounts. So this journal entry is not realistic. Instead, what you would do is you would make your credit to accounts receivable for $552, and as part of your note, you would put, Bill Rentz, the 175, Nancy Carlson, 240, and Daria Putin, 137, to write off accounts receivable for Bill Rentz, Nancy, and Daria. And then, of course, when you go to post this journal entry, you're going to post the $552 to the general ledger account, right? But remember, whenever you post to an accounts receivable or accounts payable, you have to put it in two places. You put it directly to the general ledger account, and you also have to put it to the subsidiary ledger account, right? And in the subsidiary ledger, that's where you would actually put the one for Bill Rents, the 175, Nancy Carlson, and the Daria Putin, all right? Because you're keeping that subsidiary ledger. You're not, you're not going to have, 30 accounts receivables. So this is the entry I would make, and I disagree with the entry that would be, that's part of the solution manual, okay? Because again, you're not writing off to individual accounts receivables like that. Right, and then December 31st, based on aging of accounts receivable, estimated uncollectible accounts as $31,800. So on 12/31, that's the end of the accounting period, and we're going to age our receivables, and we estimate our receivables uncollectible, our bad debt to be 31.8. So we write it off as a debit to bad debt for 3,180, and we credit our allowance account for $3,180. Okay. So that's recording all of the transactions. Now, it says here, December 31st balance of accounts receivable is $87,550. Show how accounts receivable will be reported on the balance sheet at that date. All right, so we have all of these journal entries, and we need to post to our allowance and to our bad debt. So wherever we have an allowance and a bad debt, we need to show that. So I have a debit to allowance for 800. That's this one here. I have a credit for 800. I have a debit of 552, and I have a credit of 3180. And for bad debt, I have a debit of 3180. So my balance in my bad debt is 31,800, and my balance in my oops, sorry, it's not 3180. And I made a mistake. Now that I'm thinking about it, my balance needs to be 3180. So the mistake I'm making is right here for this December 31st entry. Why? On 12/31, it says here, based on the aging, estimated uncollectibles is 3180, right? So what that means is the amount in the allowance account needs to be 3180. Well, what we need to do is we need to add up our debits, add up our credits, subtract one from the other. And the difference in this case here, the difference for this adjusting entry is a debit to bad debt expense of 2332 and a credit to allowance for 2332 in order to be able to make the ending balance be 3180, which is what we estimated it to be. Right? So that's the more correct journal entry. And of course, my bad debt over here is going to be 2332. So that's the posting to those accounts. All right, I know I made quite a few mistakes along the way here. Hopefully you're following along with me. Today just doesn't seem to be my day for this. Okay, making errors that I don't normally make. All right, but anyway, so it says here December 31st, the balance of the accounts receivable is $87,550. Show how accounts receivable would be reported on the balance sheet at that date. So here's my balance sheet, and if I'm showing it, I'd have my accounts receivable less my allowance for uncollectible accounts, and then I'd have a net accounts receivable. So if I have 87,550, less my allowance, right? The allowance is 3180, so my net accounts receivable would be $84,370. All right, so that's what my balance sheet would look like for my accounts receivable section. Okay, and that would be at December 31st. Right, so that would be the date. Right, so that's it for this problem. Again, sorry for all of the mistakes. I just whatever reason my head is in the fog, but yeah, I'm just like everybody else, and when I'm working these problems, I'm working them as if I was a student. But notice because I understand the concepts so well that when I'm doing the work and I'm thinking through the concepts, the mistakes I make, just seem to pop out at me, okay? And that comes with experience, right? So with that said, that's the end of this problem, and I will see you in the next, in the next video for the next problem, all right?